Hello everyone, welcome back to News of Asha. Today is 9th of August 2023. Let's see what's happening in the world today. China tips into deflation as efforts to stoke recovery falter. CPI fell in annual terms for the fifth time in 2 years. China first G20 economy to report deflation since Japan in 2021. More direct policy stimulus is needed. Beijing, August 9th. China's consumer sector fell into deflation and factory gate prices extended declines in July, as the world's second-largest economy struggled to revive demand and pressure mounted for Beijing to release more direct policy stimulus. China is the first G20 economy to report a year-on-year decline in consumer prices since Japan's last negative headline CPI reading in August 2021, and the weakness adds to concerns about the hit to business amongst major trading partners. Mixed prospects. China's anemic prices contrast sharply with the crippling inflation most other major economies have seen, which forced central banks elsewhere to rapidly raise interest rates. However, there are signs global inflation may be peaking and in some cases reversing. Brazil last week cut interest rates for the first time in 3 years amid more benign inflationary conditions. Investors have been anxiously waiting for policymakers to inject stimulus after the powerful Politburo meeting last month, with the stock market mostly underwhelmed by the lack of concrete actions. Markets and businesses should get used to the new normal, in which Chinese government will avoid rolling out big stimulus, said Tommy Wu, senior economist at Commerzbank. I actually disagree with Tommy Wu. As things get worse, China will definitely start stimulating the economy because they have to maintain their social contract with their population, and the social contract is basically, as the CCP will give you a good economy and a good life, and you will give us your support. And right now, the Chinese government doesn't seem to be keeping their end of the bargain. Therefore, a stimulus should be coming soon. Google fails to end 5 billion consumer privacy lawsuit. A US judge rejected Google's bid to dismiss a lawsuit claiming it invaded the privacy of millions of people by secretly tracking their internet use. US District Judge Yvonne Gonzalez-Rogers on Monday said she could not find that users consented to letting Google collect information about what they viewed online because the Alphabet unit never explicitly told them it would. The plaintiff alleged that Google Analytics cookies and apps let the Mountain View, California-based company track their activity even when they set Google Chrome's browser to incognito mode and other browsers to private browsing mode. They said this let Google learn enough about their friends' hobbies, favorite food, shopping habits, and potentially embarrassing things they seek out online, becoming an unaccountable trove of information so detailed and expensive that George Orwell could never have dreamed it. Incognito mode in Chrome gives you the choice to browse the internet without your activity being saved to your browser or device, he said. As we clearly state, each time you open a new incognito tab, websites might be able to collect information about your browsing activity during your sessions. So it seems Google couldn't get themselves out of this lawsuit, and I think it is an important lawsuit because a large amount of these big tech companies don't seem to care about people's privacy. Well, let's see how they like if their privacy is breached, and how about they giving us all the information on what's happening in their companies and all the internal emails. Maybe that might make them change their mind about how privacy is actually important for every individual. Unfortunately, the big techs and big companies and the people in power think their privacy is important because it's quote-unquote national security or some other bullshit, whereas the individual's privacy is not that important. And that's unfortunate, and I'm hopeful that this case will be a wake-up to other tech companies to actually respect people's privacy. No quick fix to reverse Antarctic sea ice loss as warning intensifies, scientists say. Singapore. Sea ice in the Antarctic region has fallen to a record low this year as results of rising global temperatures, and there is no quick fix to reverse the damage done, scientists said on Tuesday in a new study of the impact of climate change on the continent. The continent's minimum summer ice cover, which last year dipped below 2 million square kilometers for the first time since satellite monitoring began in 1978, fell further to a new low in February, according to a study published in the journal Frontier in Environmental Science. This year's sea ice minimum is 20% lower than the average over the last 40 years, equivalent to a sea ice loss nearly 10 times the area of New Zealand, said Tim Nash, director of the Antarctic Research Centre at New Zealand, Victoria University of Wellington, who was not a participant in the study. Climate change will lead to increase in the size and frequency of heat waves, ice shelf collapse, and decline in sea ice, it said, drawing on recent evidence from scientific studies of the Antarctic Ocean atmosphere, cryosphere, and biosphere. The precise impact of climate change on Antarctica and the surrounding ocean has been uncertain, and scientists have struggled to measure how much global warming is affecting the thickness of the Antarctic ice. But from phenomena such as rapid decline in sea ice, it is scientifically reasonable, which is not even a term, to assume that extreme events are going to intensify as global temperatures rise, said Martin Serget, a glaciologist at the University of Exeter and another co-author. Last year, an atmospheric river originating from Australia drove subtropical heat and moisture into the continent, causing unprecedented temperatures up to 38.5 degrees Celsius above normal, the largest variance from the norm the world has ever experienced. Well, looks like things are getting really hot, and unfortunately, we have no clue what's going on. And I hope that more and more scientists will actually come together and analyze the data, and hopefully with the use of AI, we might actually come to a better understanding of what actually is going on. Ancient lizard-like species discovered in Australia. Scientists have identified a new species of amphibians that occupied Australia some 247 million years ago. The finding ends a mystery that has captivated researchers since the 90s, when the creature's fossilized remains were found by a retired chicken farmer in New South Wales. Experts say the discovery may rewrite the evolution of amphibians in Australia. It's got the head and the body attached, and the fossilization of the creature's skin and fatty tissue around the outside of its body. All of that makes this a really rare find. Scientists say the carnivorous amphibian once lived in the freshwater lakes and streams of Sydney. This particular species belongs to the Temnospondyli family, resilient amphibians that survived 2 of Earth's 5 mass extinction events, including a series of volcanic eruptions that eradicated 70 to 80% of all dinosaurs roughly 250 million years ago. Antidepressants, I wasn't told about the side effects. About 1 in 7 people in the UK now take medication to treat depression, but some say they are not being given appropriate advice about the potential side effects of the drugs that have been prescribed. Well, that's 15% of the UK population. That's not a small number. Dylan from Glasgow was treated with the antidepressant fluoxetine from the age of 16, but when he turned 18, his medication was changed to sertraline. Within 2 months of his prescription change, he had taken his own life. His mother says neither of them were warned about the potential side effects when his medication was changed. She says he was told that it would be okay to drink alcohol while on the new antidepressant. Yet, NHS guidance says it is best to avoid alcohol when starting on sertraline until you see how it makes you feel, and the leaflet inside the box itself says alcohol should be avoided. 1 in 7 people in the UK now take antidepressants, and about 8% of those are under 25 years old. The physical and mental side effects of drugs can be wide-ranging, from headaches and brain fog to more severe side effects such as loss of sexual function and suicidal thought. This is the most interesting ironic statement I've heard in quite a while, where an antidepressant, which is supposed to make you feel better, makes you want to kill yourself. I hope they really look into this, because it seems like pharmaceutical companies have really just crossed the line on so many things in the past few years. Experts say that it's not always time for the side effects to be fully discussed at the point the drug are prescribed. So you're telling me that you are going to prescribe a drug but do not have the time to actually discuss the side effects? This is such a repeat of how we handled the last pandemic that just took place. I hope that we can actually figure out what is actually the cause of so many people feeling depressed. And I am no stranger to depression, and I can tell you that drugs are not the main cure for depression, but actually finding the root reason why you are actually depressed. The reasons may not always be obvious why someone is depressed. It could be a change in diet, it could be food, it could be a tumor, it could be so many other medical conditions besides just life being difficult or a person feeling bad about something. Unfortunately, right now we rarely take the time to actually find out what the cause of a problem is. Instead, we just treat the problem as though medication is the cure for all things. Prevention is actually a much better solution to most problems in life as opposed to cure. But pharmaceutical companies don't see it that way, due to the simple fact if we prevent something, they don't make money. So I hope everyone takes this into account when deciding to go and buy drugs for whatever medication or whatever reason, and maybe it would be better for you to figure out what's actually causing the problem. UPS and other shippers have a new vulnerability: they are workers. The load is getting heavier for package delivery companies as they wrestle with higher worker pay while demand shrinks across the industry. The latest reminder of those twin challenges came Tuesday when United Parcel Service (UPS) reported a sharp drop in revenue and profit during the second quarter. The new contract between UPS and International Brotherhood of Teamsters averted a potential strike that could have cost the US economy billions. The union said the deal was worth $30 billion. Rank and file members are voting this month to rectify the pact. Union pilots at FedEx are pressing for significant step up in pay, and trucking company Yellow blamed the same union, the International Brotherhood of Teamsters, for propelling it into bankruptcy earlier this year. After failed negotiations with Teamsters in July, the company laid off all 30,000 of its workers, including 22,000 union members, and filed for bankruptcy. In a federal lawsuit against Teamsters, Yellow blamed the union for causing negotiation delays and kept Yellow from carrying out financial restructuring plan. This is a very tricky and sensitive topic for many people, simply because big companies don't seem to think that their workers deserve more, and workers don't seem to think that big companies have any problems, and they think big companies are perfectly fine and are making billions of dollars of profits. The unfortunate event here is the disconnect between workers and employers. Workers don't have much of an idea of how a company is being run in the background, and their main idea is how much a company made in terms of profit every year, not realizing that there are many obligations, loans and debts that has to be dealt with properly. And workers are only being told that all companies do is think about their shareholders. And on the other side, most shareholders and employers in companies don't recognize the problems faced by their workers in terms of understanding that the cost of living has gone up drastically and the value of the dollar has dropped drastically. The beauty about this circumstance is the problem we are actually facing right now is quite clearly simply because money has lost so much of its value that even companies need to now squeeze everyone in order to make more profits, while workers are trying very hard to just trying to make ends meet. And this is nothing to do with the companies or the workers, but mostly to do with how central planners have been running the economy and the financial system for the past 50 odd years. 3 reasons why the stock market rally may be stopped in its tracks. It's time for sizzling stock prices to take a breather. Investors may be too optimistic about the outlook for the US economy in 2024, leading to a strong re-acceleration in earning growth. As it stands, economic indicators ranging from July jobs report to various manufacturing survey has supported that optimism. Calvasina explained investors are beginning to grow worried about the potential for another contentious race for the White House and may head for the exit in the near term. To be sure, the broader market is showing signs of fatigue. We see a market more vulnerable to bad news as stocks have become extended on a short-term basis. Trust Co-Chief Investment Officer Keith Lerner said, valuations have pushed to one of the richest levels over the past few decades, and investors' expectations have been reset sharply higher as we head into a more challenging seasonal period. In my opinion, this has nothing to do with the economy and everything to do with money printing and quantitative easing. Obviously, that's not the terms that is being used now, but in the background, there is so much money being created out of loans from banks. Therefore, this is a financial problem that is due to central planning as opposed to the economy actually being in a bad shape. Moody downgrades credit rating for 10 banks, put 6 others on notice. Higher funding costs and profitability pressures were a common theme in banks' second quarter earnings. Ratings agency Moody cut the credit rating of 10 small mid-sized banks late Monday while placing 6 bank lenders on notice for future downgrades, citing profitability challenges and funding risks. The decision reflects a challenging backdrop for the banking industry amid intense competition for attracting deposits in the aftermath of this year's banking crisis. Moody cited increased funding costs, profitability pressures, and slowing loan growth as a common theme in banks' second quarter earnings. Among the bigger banks, reason for assigning a negative outlook varied by lender. Some, including US Bancorp and Trust Financial, have lost capital buffers that could make them vulnerable in a time of renewed crisis. Others, including State Street and BNY Mellon, have experienced significant outflows in non-interest-bearing deposits, which could lead to higher funding pressure. Lending has also come under pressure as higher interest rates driven by the Fed's rate hikes dented consumer demand for new loans. However, most banks already face high loan-to-deposit ratios. This means a greater proportion of the deposits were used to make loans, and signs that banks may not have sufficient liquidity should the need rise. Banks may have to become more conservative in managing their balance sheet, which could reduce loan growth in the quarters ahead. Looks like banks are facing a very big problem. Unfortunately, there's not much we can do about it. Binance sale of USDC for BTC and ETH raises fresh concerns in latest proof of reserve report. Binance's latest proof of reserve report has come under scrutiny following its depleting USDC reserves after the collapse of Silvergate Bank. So a bank collapse that caused problems in the crypto industry. Interesting. The report released on August 1st to show transparency in the exchange dealings with user assets has sparked argument across social media spaces, heightened by Brian Armstrong's witty comments at the company's latest earnings calls. Let's talk about this Brian Armstrong, yeah? Brian Armstrong is the CEO of Coinbase, and Coinbase chief executive dropped a few comments that raised eyebrows on Binance USDC sales. You want to know why he did that? USDC remains the preferred stablecoin for Coinbase as the company is a member of the organization that owns Circle. So basically, the person that owns the company that creates USDC has a problem with the biggest company getting rid of their USDC. How interesting. It's not rocket science that in this world, big companies are just trying to get at each other's throats. We no longer have honor and integrity in our financial system, and CEOs of companies have made it a common practice to badmouth other companies as opposed to actually just doing what's right. Thank you for staying to the end of the video. Please like, share and subscribe. Leave your comments in the comment section below. I'll see you again tomorrow.